Okay, good afternoon guys. To our dear freshmen, thank you very much for choosing Arellano University and of course for choosing BS Accountancy as your course. Welcome to Arellano and we hope that you will have a 4 year of joyful journey towards becoming a CPA. Okay? Now, I am the program chair of Accountancy of Arellano Legarda Campus. I am Professor Zeus Aboy. And you can call me Prof. Zeus. Okay? So, what are we going to do in this basic accounting? So, essentially, we'll be reviewing some of the concepts you've learned in your basic accounting when you're in ABM strand. And then, also, we'll be discussing about another form of business organization, and that is the partnership form. And another one, which is a corporation. Okay? But for the meantime, let me just go back to what you've discussed, okay? Concepts that you've discussed during your basic accounting in your ABM class, okay? So, what is accounting, guys? Let us first define, since we are dealing with, or we are in this accounting course, let us define what is accounting, okay? Now, accounting is defined by our Accounting Standards Council. In the past, it's Accounting Standards Council. Now it's FRSC, Financial Reporting Standards Council. Okay, but in the past, during the ASC days, okay, we have this Statement of Financial Accounting Standards. They define accounting as number one. It is a service activity. Okay. It's a service activity whose function is what? To provide, quantitative information primarily financial in nature. About what? About economic entities. For what? Okay. For use in making economic decisions. Guys, this is just one of the many definitions of accounting. As you go through other books, you will find other definitions of accounting, okay? But let us first go through this accounting as defined by our former Accounting Standards Setting Board, that's the Accounting Standards Council. So in the Accounting Standards Council, Statement of Financial Accounting Standards, we define accounting as a service activity. What does it mean? We as accountants, we provide service to our clients, okay? We do not provide goods, but we provide our service, our professional service to our client, okay? Now, what is the purpose? Why are we providing our service to them? Because they need what? Okay, they need information that is not only quantifiable, meaning you can measure it in terms of numbers, in terms of number of units, but also in terms of what? Money, okay? Of course, when you are in business, you are particularly it is particularly of importance to you to know how much the business has, right? How much cash or resources your business has. Okay? So about what? About economic entities. What do we mean by economic entities? Does it mean that not-for-profit organizations or foundations are not part of economic entities? What do you think, guys? Well, economic entities refer to both for-profit and not-for-profit organization. What does it mean? Even if it's a non-for-profit organization, they still need accountants. Okay, why? Because there are donors who would like to find out, right? How did they use the donation? Okay, so it's more of an accountability issue for them. Okay, that's why they also need accountant to account for where the money went. Okay, about for what? For use in making economic decisions. Now, what are some of the decisions that these business owners make? Say, for example, are we going to expand or not? Are we going to increase the price of our goods or not? Are we going to decrease the price in order to be more competitive? Are we going to shut down? Okay. So those are some of the economic decisions that businessmen or business owners make that affects the business as a whole. So if you would look at this definition, you can see the importance really of accounting in every business organization. Okay? Actually, not only business as I mentioned earlier, but also not-for-profit organization, because they rely on the accountants to provide them with meaningful information that they can use in making decisions. Okay? That's the very basic reason why accountants exist, because we want to provide financial information to business owners. Okay? Now, there's what we call an accounting cycle. Now, what is this accounting cycle? Accounting cycle is actually a series of steps performed by the accountant in order for them to produce what? What we call financial statements. So this is the end product of the accounting cycle. When we are able to produce and provide the owners and other users of financial accounting information with the much needed financial statements. Okay? And who are these users of financial information? Okay? Now, remember, accounting is the language of business, and rightfully so, because we communicate. We communicate not only with people within the organization, but also people outside the organization. Okay? So who are these users that I'm referring to? Okay, some of them are, number one, those that are within the organization, like what? Management. Okay? Why does management need financial information? Now remember that management are the ones who make decisions for the company, and the decisions, whether good or bad, will make its way into the financial statements. The good decisions would make, would be reflected as profitable. Okay, so when the company is profitable, then perhaps the top level management made strategies and good business decisions. Okay, who else? Number two, you have your shareholders. Who are the shareholders? Shareholders are actually the owners of the company. They are the ones who provided capital for the business to start running its operations. Okay? So as a shareholder, you would like to know, has the management been able to use or using the resources of the company, okay, in the most efficient way possible? Because if it's being used in an efficient way, then we can say that shareholders are assured that the company will have some profitable operations, right? So as a shareholder, that will be your concern. Why? Because that is a hard-earned money, right? And of course, if that's a hard-earned money, you need to get your return. You need to get your money, okay? You need to get the fruit of your money, okay? Who else? Of course, tax authorities. Okay? Tax authorities. Of course, we have the Bureau of Internal Revenue as the tax authorities in the Philippines. Okay? Why do they need the financial statements or financial information for? Because they would like to know whether each and every taxpayer, okay, pays or settles the reasonable amount of tax. Okay? Of course, the government needs our help in terms of paying our own taxes. Why? Because this is the means by which the government is able to conduct projects, okay, build infrastructure or whatever, like in these pandemic times, okay? They need whatever financial whatever financial assistance we can give to them in the form of taxes. So we should be paying our own taxes reasonably, okay? Reasonable amount of tax. Number four, who else? Of course, creditors. Why? If you are lending money to somebody, like say for example your friend, are you or is it a concern to you if your friend will be able to return the money back? Of course, it's a concern. Why? Because you probably have set aside portion of your allowance for 1 month in order for you to be able to come up with that amount, and then your friend will just borrow it and will not return it. Is that a good one? No, it's not, because you'll be on the losing end. So creditors would like to make sure that whatever money has been led to debtors will be repaid. Okay, not only the principal but also the interest on the sum that was borrowed. Okay. So they're more on, assessing whether you are credit worthy, okay, whether the company is credit worthy or not. Number 5, of course, you have your suppliers. Okay, why? Because you are procuring or getting or buying your materials, okay, your goods from your suppliers, okay? And there are times when you have to, when you arrange for a for a credit term with your suppliers. Now, at the end of the day, you still have to pay that because it is the supplier's resource that's at stake. So, therefore, your supplier, before granting you credit, will have to make an assessment whether you are capable and you are able to pay. Okay, not only your capability, but your willingness to pay your obligation is also being evaluated by your suppliers and creditors. Okay, who else? Employees. Okay, employees, of course. Why? As an employee, you would like to make sure that you will have continuous employment with the same company, right? So as an employee, if you are employed in a company or by a company that probably has not so bright future, okay, or is not stable, then you would always be thinking of, should I still stay or should I already find another employer? Okay, so they would like to know whether the company can still pay their their salaries, their benefits, or if they can ask for more benefits from the company or not. Is it time to to jump ship and look for another employer? So those are the different reasons why employees do make use of financial statements for their own purpose. Okay, so I will end the first part of our discussion here, and I'll see you in the next video. Okay, bye.